Hi, my name is Ander Pang. Welcome to another edition of CMS Forex News. Today is Tuesday, June 24th, 2008. In Switzerland, the monthly UBS consumption indicator fell to 1.91 in May, though that is still above the long-term average of 1.50. The fall was due to lower consumer confidence as well as weaker business activity in the retail sector, a sign that growth may start weakening in the Swiss economy. In the UK, May's mortgage lending was weak with a record low number of 28,000 new approvals. The housing market in the UK will continue to face difficulty if potential home buyers are unable to take out mortgages. In Germany, the GfK consumer confidence dipped to 3.9, lower than consensus forecast. Spiraling energy costs and the threat of a further massive rise in the price of gas are increasingly dampening the consumer mood in Germany. The pound-franc pair fell 150 pips from overnight. The pound was pressured by weak mortgage approval data, and the franc benefited from a sharp fall in European stocks. Stocks plunged as an oil rally spread concerns over how companies will cope with higher costs amid slowing growth. Turning to the U.S., the S&P Case-Shiller showed that home prices in 20 metropolitan areas fell over 15% in April compared to a year ago. That is a record low for the index, which goes back to 2001, and obviously bodes ill for owners and sellers as they are seeing the value of their properties decline at such a rapid pace. One bit of consolation is that economists had expected an even greater drop in home prices. A second report on U.S. housing, this one put out by the government and looking at a broader geographic area, saw prices declining 0.8% for the month of April compared to March. On the year, prices were down 4.6%. The two reports showed that the housing market continues to adjust to an excess supply of homes on the market, while there are fewer buyers as they find it hard to obtain mortgage lending. Consumer confidence in the U.S. fell almost 8 points to 50.4. Consumers are feeling pessimistic as they see gas prices continue to increase, reminding them that the cost of living is rising. The expectations index, which measures the outlook for the future, fell to an all-time low. In a separate report, the Richmond Fed Manufacturing Index declined to -12 for the June period. All broad indicators of activity, shipments, new orders, and employment, were negative and lower than in May. Prices for raw materials and finished goods, however, continue to increase. After sliding 150 pips at one point yesterday, the euro-dollar pair bounced up from support overnight, reclaiming the 1.5620 area following the U.S. releases. The dollar was pressured by its weaker housing and consumer confidence data, an early surge in oil prices, and a weak open to U.S. equities. The dollar-yen pair stalled overnight near 108.20 and fell sharply following U.S. releases to hit support at 107.40. However, the dollar recovered some of those initial losses quickly, as U.S. equities clawed back their losses and were up by the middle of the day. With housing prices down 15% from a year ago and oil back near $138 a barrel, the direction of the market and the rest of the week will depend on the FOMC decision tomorrow. Traders will look to see what policymakers will list as their top concern: fighting inflation or the slowdown in the economy. The Australian dollar-Japanese yen pair broke resistance at 102.75 to breach the 103 level, a new 7-month high for the pair. Today, a major Australian iron ore company said that China agreed to pay a record price for its goods, helping to boost the value of the Australian currency. Tonight, Japan will post its trade balance and corporate services price index. Overnight, the UK releases a measure of activity in manufacturing, while Germany posts its preliminary version of June CPI. Tomorrow, the U.S. will release data on orders for durable goods and new home sales. At 2:15 p.m. Eastern, the FOMC will announce its decision on interest rates and provide its accompanying statement. And that wraps it up for the day in Forex News. Join us again right here tomorrow at cmsfx.com.